What are some safe ways to generate income in retirement? Well, we're going to go through a myriad of those today, and there's multiple ways you can generate income. In fact, we kind of call it MSI, multiple streams of income. The more monthly checks you have hitting your mailbox, probably the more comfortable you're going to feel in retirement. Because after all, without income, there is no retirement. So let's talk about ways you can generate income for retirement. Now, there are two main forms of income. There's guaranteed income and non-guaranteed income, and we need to understand the difference. Guaranteed income, as much as we want to use the word guaranteed, not all guaranteed income may really feel guaranteed. But the most common source of guaranteed income is what's going to come from the federal government in the form of Social Security. It may even be in the form of railroad retirement, something similar for railroaders. Now, that is pretty much the most reliable source of income you're going to have available to you in retirement. If you're blessed to have worked for a company or a municipality, state, or federal government, you may be entitled to pension income. Sadly, that is not the reality for the majority of Americans. Less than 7% of Americans yet to retire will ever have access to an actual pension. So that is not going to be for everyone. Great news for those of you that do have a pension. That is typically considered ironclad and pretty reliable income. However, if you go back and study history, you need to understand sometimes they can make changes to these pensions. The city of Detroit went through a fiscal collapse during the Great Recession about 15 years ago, and they had to reach out to the pensioners, the folks receiving those checks, and tell them, you're going to have to negotiate a smaller check or they're going to file bankruptcy. Now, the bankruptcy ultimately did not happen, but there were some changes to those pension programs. Many states, municipalities, school systems promise robust benefits. The actuarial data says they're not going to be able to pay those dollars out at some point in the future. So we want to caution you, while you may be blessed to have a pension, we want to build a plan that could protect you even if the pension had to make changes. Speaking of that guaranteed income, in just a few short years, the federal government is telling you that they're going to have to reduce one of those guaranteed sources of income, and that's Social Security. Right now, it is estimated by the CBO, the Congressional Budget Office, that all Social Security recipients will have to take about a 17% cut across the board somewhere around 2033 because the government just doesn't have enough revenue to pay its bills. Now, I'm not here to get into political talk on this. I'm just here to show you that if you have a properly designed income plan with a qualified financial professional, we can try to make up that gap if it happens with other sources of income. And that's what we're talking about in today's video. So, the most common form of income we can receive outside of those is the non-guaranteed side. The first thing you can get is what's called interest income. Interest rates today for CDs and money markets are somewhere hovering around 4%. It's not always guaranteed that that rate will stick around. In fact, the Federal Reserve is most likely going to start cutting interest rates in the very near future. So the interest that you receive on your savings or your certificates of deposit at a local bank will most likely go down in the near future. It works both ways. Interest rates go back up at some other time. So you can count on that interest. If it's an FDIC insured CD, the bank is guaranteeing the principal and they're guaranteeing you're going to get that interest. But that interest rate, you have what's called reinvestment risk. If you buy a 3-year CD and when you go to reinvest that CD 3 years from now, you may not get the same interest rate. So we want to make sure we're planning inflation adjusted income planning for you in retirement when you're looking at these sources of income. That's interest income. Now, the second form of interest income could be potentially tax-free. This could be from things like municipal bonds, especially if you live in a state like I do that has state income tax. If I buy municipal bonds from the cities, the local government where I live, I will not have to pay income tax on that income. That could actually increase the return or increase the yield, the percentage you're after tax getting. That's really important. The next form of income you may use in retirement is called dividend income. You may invest to grow your portfolio over time, and you may invest it in things like stocks that pay you dividends. This is their way of rewarding shareholders to be long-term investors in the company. So great long-term companies will pay dividends consistently over time. So we can build a dividend portfolio, and those are typically going to yield between 3 and 5%, depending on the economy, the macro environment, etc., on your portfolio, and you have the potential to grow the principal you've invested. But of course, that principal is at risk. The markets may not always be friendly, and that may go down. What we don't want you to do is, if you set up a dividend portfolio, panic because the value of those instruments has gone down. But if they're paying those dividends consistently, you can count on that income, whether it's monthly, quarterly, or yearly. So those are a couple forms of income. Another way to get income in retirement is to diversify your portfolio into non-correlated, non-traditional retirement assets. So in other words, most people know about stocks and bonds. They invest in things like their 401k and IRA, etc. But we highly encourage people to look at things like real estate. Now, you do not have to go out and buy a rental property. I have owned several rental properties in my life. I am an experienced real estate investor. But the great news is today, a qualified financial professional can very easily help you get exposure to real estate that you can then receive the income as a consistent flow of income in your retirement. And again, real estate is not correlated. It won't perform the same, that's what I'm saying, as your stocks and bonds at different periods of time, no matter how the economy is doing. At some points, it will underperform. At other times, it will overperform. But real estate gives you advantages in the tax code if you own it directly. And the income can be tax advantaged thanks to understanding things like depreciation. Again, a lot more complicated than that, but for today's video, we just want to keep it high level. So real estate is another great source of income. We have a lot of folks in the Midwest where I live that have farmland and they cash rent it. They don't even farm it. They just rent it out to another farmer. We call that cash rent. That is another consistent and reliable sources of income. However, it may not be the best and most profitable use of the dollars that asset would otherwise bring in another style of investment. But what we want is multiple sources of income that are not correlated. In other words, they're not going to perform the same as each other. What if you own a small business? What if you become an entrepreneur in retirement? It's becoming very popular for people to start part-time or side hustles, if you will, in retirement. Perhaps you just have a hobby that you can turn into an income source. Maybe you want to teach music lessons to local kids in your neighborhood. These can become consistent and reliable sources of income used to supplement your retirement. Now, if you want more guaranteed income, you can purchase that from big insurance companies through the form of what's called an annuity. Now, before you would do that, we want to caution you, not all annuities are created the same. I'm not real big fan of what's called a variable annuity because it's just that your money is actually invested in the market and will perform very similarly to your other stocks and bonds because it's invested in the same way, but it comes with a lot of additional fees. However, they will give you a guarantee. When you purchase one of these vehicles, it could be a death benefit or a guaranteed income benefit, depending on what your needs are. But those guarantees also come with additional fees. So make sure you completely understand the fees and expenses before putting your money into one of those type of investments. There are also what's called fixed annuities that will give you guaranteed income. Most of them are going to charge a small rider charge to give you a guaranteed income. This is basically buying a pension. There is no risk to the principal other than if the insurance company itself went out of business. For instance, if you gave the insurance company $200,000, they may guarantee you $8,000 or $10,000 a year of guaranteed income, depending on what year you want to turn on, for as long as you live, even if you run out of the principal you invested. So the advantage here is that income is something you cannot outlive, even if the principal goes to zero. The disadvantage is most likely if you turn these type of income sources on, you will run the account to zero and there'll be nothing to pass on to the beneficiary. But again, may be appropriate for some people. We are very cautious here at Retire Smart before we sign up for a fee, a guaranteed income fee. We don't find that most of our clients actually need to pay that fee, but it's a case-by-case basis. So one of the things I want to make sure you get out of this video is whoever you're working with in the financial services industry, they should not love any product too much, and they should not be leery of any product too much. Everyone deserves a tailored plan that can get income from multiple sources. Now, sticking in the realm of insurance carriers and annuities, Another product they offer that you can potentially use for income in retirement is a properly designed permanent life insurance policy that accumulates cash value. Now, these come in many forms: whole life insurance, indexed life insurance, universal life insurance, variable life insurance, etc. The cash value in these policies grows and grows over time. And if you use an index style policy or a whole life policy, you're typically not going to have your principal go backwards, except the expense and fees involved in that insurance policy. And it does have expenses. And the first 10 years, insurance policies are way more expensive than they are the following 10 years because the insurance company is taking on the most risk the day they put that policy in force. In other words, if you pass away, they're going to pay a death benefit to your beneficiaries. Great news there is the death benefit is always tax-free to the beneficiary. But if you design one of these policies properly and have accumulated cash value in a policy you may already have, most people don't realize that you can borrow against that policy from the insurance carrier, and they can say no. They can't say no. That potential loan you take is a tax-free access to that capital. So you may potentially create tax-free income stream to supplement your retirement. And you could use this over your whole retirement or just for a period of time. For instance, what if you wanted to retire early at 62 and someone like me said, hey, don't turn on Social Security till you're 67? What if you had cash value accumulated in a life insurance policy? We could take cash tax-free out of the policy if we use a proper design loan to supplement your income and get you, instead of the Social Security, another source of income. So we just went rapid fire through a very wild array of income sources, and that's not all of them, by the way. We want you to understand, working with a properly designed financial plan with a great credentialed, independent, fiduciary-based advisor can build an income plan, and then we want to maximize all those income sources to maximize the benefits of understanding how those sources will be taxed. This is critical because it's not what you get gross, it's what you get to keep and spend that gives you a successful and happy retirement. Listen, hopefully something in this video struck your fancy and maybe it's an income source you're not currently utilizing. If you would like to learn more about any of these things or any other topics, click below or put a comment below, and we may answer those questions in a future video. And be sure and watch some of our other videos here on the channel. Like, subscribe, and click the bell to be notified when a new video will be posted. That's your sources of income video for today. Thanks for watching.